This is a really exciting time for the world in so many ways, where Bitcoin's going to completely transform the economy.
What's up, crypto fans? Today, we're about to reveal what the next 5 months in crypto could look like. And trust me, it's a roller coaster you don't want to miss. Bitcoin is hanging tight around $110,000 to $111,000. But the real question is, what's next for the market's next big move? History shows us that these consolidation periods are just pauses before explosive gains, just like we saw in late 2023 and late 2024. And yes, September might be tough, but that dip could be your golden ticket to big gains if you play it right. So buckle up, I'm about to show you the 6 coins to watch and why the upcoming months could totally reshape your crypto game. Ready to dive in? Let's go. Bitcoin, entering the buy zone and the path ahead. Bitcoin, BTC, has entered a critical buy zone, a level that many traders and investors see as a prime entry point. The narrative is bullish. If Bitcoin dips slightly below current levels for a short period, many are ready to accumulate more. The consensus among market watchers is that Bitcoin could surpass $150,000 by the end of the year, driven by macroeconomic factors, institutional adoption, and upcoming regulatory clarity. The recent price action shows a healthy consolidation after a formidable rally, reminiscent of previous cycles where periods of sideways movement preceded explosive breakouts. Historically, Bitcoin has been resilient during September, often setting up for a strong Q4. This pattern suggests that the current dip might be a prelude to another leg higher, especially with institutional players like BlackRock increasing their Bitcoin holdings via ETFs, buying more than the daily issuance of new Bitcoin. Ethereum, the rising titan with unmatched speed. Ethereum, ETH, continues to impress with its rapid growth trajectory. Recently, Ethereum made history by becoming the fastest asset ever to reach a $500 billion market cap, achieving this milestone in just 5.8 years, beating giants like Facebook, Alibaba, and even Bitcoin itself. This milestone underscores Ethereum's fundamental role in the decentralized finance, DeFi, and non-fungible token, NFT, ecosystems. Despite a current pullback, Ethereum's pattern mirrors its 2021 bull run, where it hovered around its previous all-time high for weeks before breaking into new price discovery zones. The amount of Ethereum on exchanges recently dropped to multi-year lows. Only 18.3 million ETH remains readily available, indicating strong accumulation by long-term holders and institutional investors. Furthermore, Ethereum's ecosystem is gaining momentum with major public companies and entities holding millions of ETH in treasury. Notably, 70 publicly traded companies now collectively hold around 4 million ETH, signaling mainstream acceptance and confidence in Ethereum's future. Altcoins in the spotlight: Solana, Avalanche, and more. While Bitcoin and Ethereum dominate headlines, several altcoins are positioning themselves for significant upward moves. Solana, SOL, Avalanche, AVAX, and other high-quality altcoins continue to attract investor interest. The broader narrative is that these projects offer innovative solutions, scalability, interoperability, and low transaction costs that are essential for the next phase of blockchain adoption. The growth in altcoins is also supported by regulatory developments. The upcoming Market Structure Bill, known as the Clarity Act, aims to provide a clear regulatory framework for digital assets in the U.S. This legislation could catalyze institutional participation and innovation, making altcoins more accessible and attractive to mainstream investors. Regulatory wins: the U.S. cracks down or opens up. Regulation remains a pivotal factor influencing the crypto landscape. The recent statements from the SEC chair, appointed by former President Trump, Paul Atkins, highlight a push toward fostering crypto super apps. These apps would enable securities intermediaries to offer a broad spectrum of products and services under a single license, reducing the regulatory burdens that have historically hampered innovation. The Clarity Act, expected to pass around September or October, promises to address the current regulatory chaos. It aims to establish a transparent framework that encourages innovation while protecting consumers. This legislation could be transformative, allowing US-based companies to develop and deploy crypto solutions domestically rather than moving offshore. Institutional adoption. The growing interest in Ethereum and Bitcoin. Institutional interest continues to surge. The fact that 70 publicly traded companies now hold a combined 4 million ETH signals a significant shift toward mainstream acceptance. Additionally, major financial players like BlackRock are buying Bitcoin via ETFs at rates surpassing new Bitcoin issuance, which is around 900 BTC per day, while their ETF purchases are about 1,200 BTC daily. Billionaire investors like Tim Draper remain bullish, predicting Bitcoin could reach $250,000. While he admits to earlier overestimations, his conviction in Bitcoin's long-term potential is unwavering. Draper emphasizes Bitcoin as a hedge against government mismanagement, inflation, and uncontrolled spending, especially pertinent given the increasing government debt levels worldwide. The bullish case: why the next 5 months could be explosive. Multiple catalysts point toward a bullish outlook for the crypto market in the upcoming months. Regulatory clarity. The expected passage of the Clarity Act will provide the legal certainty needed for institutional players to participate confidently. Institutional accumulation. Large-scale purchases by corporations and asset managers indicate a strong belief in crypto's future. Market cycles. Historical patterns suggest September often leads into a strong Q4 rally, and current consolidation might be setting the stage for a breakout. Ethereum's ecosystem growth. The rapid market cap growth and decreasing exchange supply highlight increasing institutional and retail confidence. Bitcoin's resilience. Despite recent pullbacks, Bitcoin's fundamentals remain strong, and macroeconomic factors like inflation and geopolitical tensions support its narrative as a store of value. What are investors doing now? Smart investors are taking advantage of current dips to accumulate high-quality assets. The consensus among crypto insiders is to buy Ethereum, Bitcoin, Solana, Avalanche, and select altcoins like Borg token, Cody, and Supra. These assets are believed to be well-positioned to benefit from upcoming bullish catalysts. Moreover, the rising interest from ETFs, endowments, and hedge funds signifies that the institutional wave is just beginning. As more traditional financial entities recognize the long-term value of digital assets, the demand, and consequently the prices, are expected to climb. What could change the game? While the outlook is bullish, investors should remain vigilant. Market sentiment can shift quickly due to macroeconomic developments, regulatory changes, or unforeseen technical hurdles. However, the current environment is ripe with positive signals. The passing of the Clarity Act would unlock new avenues for innovation and adoption. Institutional buying will continue to underpin price stability and growth. Ethereum's upgrade roadmap, including upcoming protocol improvements, will further bolster its utility and valuation. Global macroeconomic factors such as inflation rates and government spending continue to favor Bitcoin as a hedge. A promising horizon for crypto enthusiasts. The next 5 months in crypto are poised for significant developments. From Bitcoin's potential to surpass $150,000 to Ethereum's historic milestones and the rise of innovative altcoins, the landscape is brimming with opportunity. Institutional interest and regulatory clarity are adding fuel to the fire, setting the stage for what many believe will be an explosive Q4. For investors, this environment offers both risk and enormous reward. The key is to stay informed, remain strategic in holdings, and capitalize on dips to accumulate high-quality assets. As the crypto market continues its cyclical journey, those prepared now will be best positioned to ride the next wave of growth. So, are you ready to take advantage of the upcoming crypto surge? The next 5 months could be game changers, potentially transforming your portfolio and your financial future. Whether you're a seasoned investor or just getting started, now is the time to stay informed, make strategic moves, and position yourself for the explosive growth ahead. If you found this video valuable, smash that like button, subscribe to the channel, and turn on notifications so you're first to know when we drop new insights. Drop your thoughts in the comments. What coins are you buying, and what's your bullish prediction for the next few months? Let's get the conversation going. Remember, in crypto, timing is everything. Stay bullish, stay vigilant, and keep your eyes on the horizon. Thanks for watching, and I'll see you in the next one.